let's have a look at some stock picks and let's get his thoughts on some momentum in the stocks that have reported to date. Jason McIntosh joins us from Motion Trader. Good morning, Jason. Well, we know you're a bit of a chart guru. What have the charts been telling you about reporting season to date? Are we seeing positive momentum?
Morning, Annette. It's look, it's always interesting to see the results as they come out. And more often than not, what I find tends to happen is that the news flow often validates the pre-existing momentum. So I was on the call with Andy Penn, a few weeks ago, and we're talking about the Telstra result. And really good result, saw the share price shoot higher on the day. But you look at the share price and the momentum in Telstra had actually turned upwards back in February. So it's really wasn't a great surprise that the result was good and that momentum continued. Saw something similar with a stock called ReadyTech, which I saw you had the CEO on recently. And I was on the, I think we were talking about that 3 weeks ago, talking about like the momentum was coming into the share price. They had a good story. Lo and behold, we've seen good results. The share price has shot up 30% over the last 3 weeks. So look, that's kind of how I've been seeing a lot of the reporting season to date. It's the old case, look for the trend, look for the momentum, and the news often follows.
Jason, we'll stick with the technicals for a minute, only because I find it absolutely fascinating and I'm not Kara on the trade. But what do the charts do when you talk about a short squeeze? Like Redbubble had a short squeeze. It looks like WiseTech has a short squeeze. How do charts deal with that sort of pop in the share price?
It's well, look, this is all about where if you're trading on the short side, you just need to have risk management procedures to how to handle it when the market reverses. So we saw the short squeeze of all short squeeze in GameStop earlier this year. It's trading short's a risky game, and this is when the short squeeze happens. You're playing, often there's leverage involved. Trading short, the risk reward is often not as strong as when you're trading long. So it's and the short squeeze can come on rapidly when there's not a lot of stock to be bought available to buy, and a lot of people need to buy back shorts. It leads to these really swift moves, like maybe we're seeing in WiseTech. You were talking about a little bit earlier. It's and you can't always pick it. Sometimes a result comes out of left field, and if you're short at the wrong time, you've got to buy stock back, and you've got leverage. You can have a big problem.
Yeah, certainly. You've got to keep your eyes peeled, that's for sure. Let's home in on a couple of stocks that you've pointed out. So what did Adacel say that's got your attention?
Yeah, Adacel's a really, really interesting company. It's one of those stocks a lot of people probably haven't really heard about much at all. And it's only got a market cap of $100 million, not in the all ordinaries. But it's one of those stocks that whilst you may not have heard of it, chances are you've had exposure to their services and the products they offer. So what they do is that they supply air traffic control and simulation software, and they're operating across the civil and the defence sectors, based in Australia, the US, and Canada. And the company says that their air traffic management systems cover pretty much about 21% of the globe. So they've got a really big global reach. So this is why I say that if you mightn't have heard of it, but you've probably been exposed to it. So if you've been up in an airline some point over, when we used to fly in planes, you've probably been through airspace controlled by their technology. And they had their report out, their yearly results out a couple of weeks ago. Really good numbers. They saw a 250% increase in their profit before tax. So that was up to 7.7 million, off revenue of about 40 million, which was also up slightly. And another positive from that was that their net margin increased by, or their gross margin, increased by 35% to 40%. So some really good things happening there. Company put that down to a good mix of products and better execution of the strategy, and all that leads to a strong balance sheet. So they've got something like $11.5 million in cash, which is up about 120%. So the interesting thing that's going to happen from here is like what they're going to do with all that cash. So the options on the table are dividends, share buybacks, and mergers and acquisitions. So on the dividend front, They paid out 6 cents in dividend per share in the last financial year. So that equates to an unfranked yield of around 4.5%. So a really good dividend there. And they paid out something like 60% of their profit before tax. So they've got really good cash generation coming through. They've got a share buyback underway. So I think that's going to underpin the share price and potentially fuel this emerging uptrend we're seeing. And M&A just adds an extra potential growth element over the next year or so. And it's really interesting how this business is structured. It's 30% on systems and 70% on services. So systems is all about the software that goes in behind air traffic management and their simulation business. And then the service is about the maintenance and the upgrade of those systems. And the way this thing works is that once the systems are in place, it often leads to long-term support and revenue streams. So it's a really interesting business. So it's quite it's quite sticky in terms of once they do the systems, they get that long revenue stream. And because it's also like a high barrier to entry because the company owns the source code, so it's hard for someone else to come in and do much with it. Recently did a deal with the Seychelles Aviation Authority. They've commissioned a new systems for Fiji's airport. So, and all this leads again onto those long-term services. So look, it turned up in the momentum scans about a month ago. And look, it's just interesting, as we spoke about then, that the news flow often validates the momentum, and we've been seeing that in Adacel's share price. PE is only around 14 times. I think there's plenty of scope for this stock to probably rise over maybe the next year or so. And $1.35 a share, well, it's still well below its 2016 highs. I've got up to around $3.50. So I think from that perspective, there's also plenty of upside room to move on this one.
Well, not that you're on the call, but that sounds like a buy to me. And let's switch gears and talk about Novonix. So lithium, of course, market darling, new age minerals. What takes your eye there?
Yeah. So an emerging player in the lithium-ion battery industry. So this one turned up in my scans about a month ago. And what was interesting here is that it was starting to regain momentum following a multi-month consolidation. So you can see we had that big run up on the charts during, in the first part of the year. Then we just went in that big pullback, went sideways, and we've recently really started to pick up the momentum. And I'll explain why that is in a moment. But just briefly, there's two parts to this business. So the first part involves their battery testing business, and this is behind much of their June quarter revenue. It came in at around $2 million versus $1.3 million in the previous quarter. So they're generating good cash flows, and that part's travelling nicely. But look, this is a $1.6 billion company, so they need a bit more than a couple of $1 million in revenue a quarter to make this work. So this brings us to the really exciting part of this business, and that's their synthetic graphite anode business. Bit of a mouthful to get all that out. And so what that all about is these synthetic graphite anodes are a really important part of the lithium-ion battery, and it's a big factor in longevity and performance. And a key selling factor with what Novonix has is that their anode material is both high in purity and consistency. And so this is one of these big things in getting these long life batteries. And in the testing they've been doing, their product's been outperforming a lot of some of the leading products on the market. So I think they've got a really good offering in what they're producing. And another positive for this company is that they've got their operations situated in America. So the way that synthetic graphite has been working is a lot of supply has been coming out of Asia, primarily China. So having this American-based supply, I think is going to be a real positive, because the company's saying they're seeing strong demand strong interest from American companies wanting locally sourced synthetic graphite. And they've got agreements in place with Samsung and Sanyo, so they're building their base there. But I think the really big growth story is going to come from the electrification of the US road network. So the company's planning on producing enough anode material for like about 180,000 cars by 2023. By 2025, they're looking at 730,000 cars worth of anode material. And then by 2030, well, then it goes out to 2.7 million. So there's a really big growth story in what they're doing here. And now the reason for this big move in the share price in the last couple of weeks has been a company called Phillips 66 has just agreed to buy a 16% stake in the company. They're going to be issued new shares. They're going to pay 150 million US for it. They're going to get a seat on the board. And what those funds are going to be used for, they're going to be used to fund the expansion out to 2025. So it's, I think it's a real validation in what the company's doing. It's, I think this is an exciting company. They've got a strong balance sheet, about 130 million in the bank as of the end of June. The directors put in around $16 million through a placement in February, and that's where much of the cash balance comes from, big placement that they did. And then you got the money coming through from Phillips 66. So all in all, very interesting stock. I think after that big rally, it may need a bit of time to consolidate and just work through that rise. But I think that we've got limited downside from here potentially, and the upside is enormous over the next few years if they can really commercialise what they're doing and getting it happening. So exciting stock and one well worth keeping an eye on.
Well, you've certainly given us some food for thought there for ADA and NVX. Thank you for that, Jason McIntosh from Motion Trading. Thank you so much. Speak again.
Thank you, Annette.